Hi everybody, this is Boris Schloss from BK Forex. Welcome to our Forex Daily Technicals for 8/23/13. As always, trading Forex on margin carries a high level of risk, may not be suitable for all investors. I ask you to read this disclaimer very carefully to understand all the risks associated with trading on margin. Well, I think the story today that's kind of central to what's going on is the continued dollar strength in dollar yen today. We really held and pretty much closed at the highs today. This is obviously off the assumption that Fed is going to taper. Relatively decent U.S. economic data today. All of that helping us boost the move higher. So we're now trading. We talked about the idea that if we broke 97s, that was going to be very bearish. But we started to pull away. This would be a higher low, and therefore start to look a lot more bullish and constructive. Now, obviously, 99 becomes the critical target of the longs. Let's see if we can push it through, or at least try to make a run through it in early Asia trade. There is this massive overhead here from 100, I think it's 101.50, right? Somewhere around this. That is definitely operating as a key point of resistance that we need to be concerned about. But in the meantime, there's still quite a lot of way to go. We have to clear 99 and then, of course, 99.50 in order to establish a pretty serious beachhead for dollar bulls. But overall, the last 3 days worth of price action in dollar yen has certainly turned a much more bullish tone in the pair. It really creates a much more interesting trade. Although, of course, coming up against here, this could also be setting us up for a double top. That's why it's very much worth watching these levels. It's a little too early to consider the double top action. There's quite a lot of, it's about 100, maybe almost 200 pips worth of price action before we hit real resistance. So therefore, the odds favor more momentum to the upside for the time being. And of course, 99 definitely going to be in view of traders tonight. Let's see if Asia can push it through. There's literally nothing on the economic calendar in Asia, very little in Europe, and just as little in the U.S. It's going to be primarily Jackson Hole as a driver of any kind of trade tomorrow on the news flow, and pretty much more of I think momentum trade is really what's going to be happening. The other interesting trade, something we don't really look at very carefully for a long time, but something I've been pointing out over the last few days is look at this move in dollar CAD. 5 straight days of rally. We basically came off from 103s to 105s. Now, of course, we enter a much more serious resistance zone here at the 106 level, 106, 105.50, 106 level, and I think that's going to be a much harder move for the trade. But what is the reason driving dollar CAD so high? And I think it's really essentially the differential between U.S. and Canadian yields. Remember, the Canadian BOC, the Bank of Canada, has communicated that they're not going to raise rates anytime soon. They're going to maintain essentially their very accommodative stance for quite a long time coming. The economy in Canada is definitely tapered off significantly. Retail sales have been very, very weak today. And all of that against a backdrop where U.S. yields continue to climb. So the differential between the two yields really driving the pair higher. But as I said, it's coming up into very, very significant resistance at 106 here. And it looks to me more of a sell the rally than a buy the breakout at this point, unless of course we clear 106.50, then it opens up a whole new ball game. But definitely keep worth watching as it's developing its move. Euro dollar, we talked about the idea that euro dollar had an inside day yesterday. We broke to the downside, but then came right back, which again suggests that we are very much contained in this 33, 34, 50 zone. And one of the interesting things about this is that while yes, dollar is getting some appreciation against the yen, it's not making much headway against the euro because the situation in the eurozone is also starting to improve, and German yields are also now at their highest in I think almost a year, and that basically mitigates and sort of negates any of the dollar strength. So we find ourselves in this very consolidative mode, pretty much the 33, 34 zone. We'll see how it plays out. I think really at this point, we're now pretty much consolidating around these levels, maybe 32 to 34.50, until we get the true direction from the NFPs. If the labor data in the U.S. continues to basically muddle along at close to 200,000 rate, we probably will get a little bit of dollar strength, and this is going to come off and give us a double top. If we get weakness, then I think it could really break out here and move ourselves all the way to 35, possibly challenge the swing highs around 37. So for the time being, it's just sludge as the 33, 34 range holds. There is obviously a possibility we can break down to the lower end of the range, but it's still on a longer term time scale. What you're seeing here is still range bound trading. Although the longer we kind of stay here and we don't make any forward progress, it will begin to look like distribution, and the potential for further dollar strength could really come into play. Definitely worth watching, but very little price action in the meantime to take any kind of intelligent trade on. The last thing that I think is really interesting today is the double top. Let me see if there we go. There's the chart. The double top formation in pound. The pound basically failed at 57 very, very stealthily. It was just basically the move yesterday, big turn, big fade, and further weakness today. Now we could get a little bit more of consolidation, but now 57 becomes even a tougher barrier to crack. And even more of a consolidation, because now it's operating as a kind of a double top formation. Meantime, 55.50 is near support, and the 5500 is the longer term support here that could bring us right back into this breakout zone from which it popped out just a few days ago. So very much worth watching. Pound certainly to the weak side as far as this trade goes. If we do get continuation in dollar yen strength, and the fact that the euro is holding up, this does open up the potential. Where's my? Just looking for my euro yen. Here's euro yen. This does open up potential for us to look at the euro yen, still trading quite well, quite strongly around 31.90. For this break around 32s, and now a challenge really to this much more significant resistance at the 33s, 34s. So it's worth watching here, especially if yen can barrel through the 99 level towards the 100. This really puts us on a path, given the fact that euro really is not collapsing against the dollar, towards a challenge of the swing highs over here. So another trade worth watching as the day progresses. That's pretty much how the day sets up. Wishing you guys the best of luck and the best of trading. This is Boris Schlossberg, over and out.